You get what you pay for. Hello and welcome to the Durham Talents channel. My name is Jesse Durham. Today we're doing another installment of our quote series where we are going to address the quote, you get what you pay for. Now, immediately when I thought about this quote as a financial quote, you get what you pay for, I immediately thought of the age-old battle between this idea of buying whole life insurance, guaranteed, permanent whole life insurance, versus buying term and investing the difference, right? So buying term and investing the difference, whole life insurance. This is a subject that I've covered this subject a few different times, and I know that it's something that is out there in the financial entertainment world. And it seems like there's no middle ground, that you're on one side of the fence or the other. Here's where my mind went. You get what you pay for. There are plenty of folks out there that will immediately just point to price as if that were the only decision to make. Well, if this one costs X number of dollars and this one costs a fraction of that, this one is obviously the better choice because it costs me less, right? And that's how plenty of insurance professionals, and I'm not bashing, I love the insurance industry. The insurance industry also is not perfect. And there are many out there who will say, well, let me run things for you, see if I can get you a better rate. Let me see if I can get you a better premium price. Let me see if I can lower that for you. And I understand that. I understand that everybody wants the best price for what they're getting. And, in business, I've heard it put in a very simple and interesting way, that when it comes down to it, you've got just a couple of different ways that you could be the best at what it is you do, right? You could be the quickest. That would be one way to try and get to the top of whatever your game is, whatever your industry or your space is, be the one that gets it done the fastest. Another would be quality, just doing the absolute, cross the T's, dot the I's, the absolute best work, regardless of how long it takes, right? And then you can get to this best price or the lowest price. So those are some very general areas where there's something that will differentiate one product or service or company or individual from another. When I hear you get what you pay for in this context of practicing infinite banking, it stands to reason to me that term insurance would be a fraction of what traditional whole life insurance, and I'm not even yet talking about properly structured whole life insurance with a mutual company that pays a dividend, although there are some factors that will play into the difference between the amounts of premiums that you could pay for either of those products. Because if you're a policy owner in a mutual company, you're part owner of the company. And therefore, by being part owner of the company, you get to participate in the overall performance of said company in the form of a dividend. If the company does well that year, that can be reflected in a dividend that you receive as being part owner of the company. But those are just a couple of reasons to be sure. And there are many that we could list. So you get what you pay for. If I'm buying term insurance for the next 10 years, that's not going to be the same thing as me buying a policy that would go until I turned 121 years old. And I actually plan on living to 120. Thank you very much. And I hope you do too. But that is a stark contrast for sure between looking at a product that would cover me for 10 years. And yes, it probably could cost me much less to be covered for those 10 years. Now, there are other characteristics, such as with a whole life insurance policy, especially one that's been structured for the banking purpose, there is going to be a guaranteed cash value to that policy. And a cash value is merely a net representation today of that future death benefit. So here you have the future death benefit. And I do believe in everyone being adequately covered, adequately protected. And what I found to be the case, and what Nelson said, is if you will account for your need of finance, your need to access capital to finance the things that you're going to do in life, you'll ultimately end up with more death benefit than you otherwise could have been underwritten for in the first place. More benefits. And again, this is how it ties into this idea of you get what you pay for. My wife and I pay significant premiums for multiple policies that we own with multiple companies. We're getting what we pay for. All of the rights that we contractually have by being the owners of those policies, the guaranteed permanent death benefit, access to capital in a known interest environment, being in control of the wins and at the rates of repaying the capital that we access via policy loans, all of those things, having hedging against inflation, hedging against litigation, having guarantees. There are many, many different characteristics that set those products apart. So briefly to say, for sure, you get what you pay for. And if this has sparked an interest in you to have a conversation about what it could look like for you to implement the infinite banking concept into your household or your business or your investing, then you could reach us at 828-817-4223, or you can email durhamtalents@gmail.com. This has been a great pleasure for me. I look forward to our next conversation. Have a great day. Take care.
Well, it's true. You get what you pay for.
Get what you pay for.
Get what you pay for.
You get what you pay for. That one sounds all right. I love it, actually. It's one of my favorites. We go way back to free.